Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to be talking a little bit about strategies. We're going to talk the Piranha and the Pendulum. We'll also see a lot going on in the political atmosphere. We've seen breaking stories about the last 12 hours that really show you that potentially maybe something big is on the horizon politically. And I sent out a few tweets about what happened yesterday, and I'm very, very interested to see what happens for the rest of this week because I feel like this could be the calm before the storm. We could definitely see some major moves, potentially in Russia, Ukraine, but we could also see maybe a 25th Amendment being exercised here in the United States. So it's all very big stuff. I mean, it's politics as usual, but it's not politics as usual. The wheels are turning, and I got to tell you that the next steps could be anything. So I want to welcome everybody back. Dibble, good to see you. Mark Corp, always a pleasure. Bobby Bob, yeah, I mean, things are interesting to start the week. This is sort of our new format. Connor Woods is gone, so we're going to go ahead and see if we can go ahead and carry on without him. I think we can do just fine. But what we will do is sort of we're going to be messing around with our scheduling for right this minute, and I want to make darn sure that we all understand that the times are going to be changing this week. We're going to go static, 1 p.m. Eastern. We're going to be doing this stream every single day. I'm going to do my best to give you the coverage that we usually give. And we want to mix in some strategy. We want to do news and all those things. But we may be going to 2 streams a day relatively soon. So if you're interested in 2 streams a day, or if you're interested in maybe another time that this may, in fact, work for you, that's fantastic. I'm pretty limited time-wise. I'm going to be stretched pretty thin. So I appreciate your patience on me getting back to you via private message. I also really just appreciate everybody's patience in general. But the way forward looks bright. I feel pretty good about what we're going to be doing content-wise. We're putting a lot of stuff out there, as we always do. So if you haven't followed us, follow us on X. Be sure to check us out. If you're on LinkedIn, follow us on LinkedIn, How to Trade. And also check out our YouTube channels. We have 2 of them, How to Trade YouTube, and then we also have Forex Signals YouTube. But really, there's a lot going on today, and it's an interesting day. Why is it an interesting day? Well, it's Cyber Monday. So Cyber Monday, everybody's going to do their Christmas shopping today. I know that I am. Black Friday specials in full effect today on Cyber Monday. So if you need to trade, get on into Switch Markets. Head on over to switchmarkets.com. Triple your excitement, 100% cash bonus. You'll also earn rebates on your trades, every $2 for every per lot traded, and then available to win, or at least you'll be eligible to win that iPhone 16. So I want to start off with a quick promo. It is Cyber Monday, so we might as well take full advantage of that. We got something cooking on a Piranha trade. Now, for those of you that don't know what the Piranha, we're going to talk about the Piranha. I'm going to show you in depth what it is. Essentially, we set our Bollinger Bands to a real tight setting, and then you're looking to sell that upper Bollinger Band, and you're looking to buy that lower Bollinger Band. Right now, we're sort of dialing in a trade on this Great Britain Pound USD 5-minute chart. That's going to give us an opportunity potentially to make a trade during this live stream. That'll be fantastic. Remember, demo dollars, trade your own size, 1% to 3% of your account. If you wanted to trade 3% of your account on each and every one of these Piranha trades, go for it. I think that'd be fantastic. But as far as what we do here, there will come a time when we're trading challenge money and we're trading real money and all that, and I'll tell you when that is. But this right here is just sort of demo dollars. I want you to get a good look at what exactly leverage can do to your account, both for and against you. So let me see the unclonable, absolutely, or the unclonable, excuse me. That'd be great. Yeah, we're just taking a look at things right now. It's going to take a week or 2, probably up until Christmas, to really get settled in. I do have some vacation time coming up towards the end of the year, so I will be out of the office. But I really want to just settle in and say, okay, how are we best going to do this into the new year? What can we really develop for you content-wise? And I think we're going to do a pretty darn good job of it. So let's see Dragon. Good to see you, Dragon. But this is a good look at a Piranha trade. And if you don't know what the Piranha is and you don't know the hows and the whys, don't worry about it. We're going to go ahead and I'll sort of reverse engineer and explain this trade. But one of the key elements of it is you have to be right on that upper Bollinger Band if you're going to sell it, and right on the lower Bollinger Band if you're going to buy it. So right now I'm watching this. It looks like we're going to get this relatively quickly. We just got to sort of wait and see exactly how it pans out. All right, it's Monday. Why not start out with some politics? I got to start out with this because we don't really go too deep into politics. I talk about how that could impact the markets. A lot of folks are just going to laugh at me and say, Shane, you're grabbing here. No, I'm not. There's a lot of different ways to read the markets. And one of the biggest things as traders you need to develop is intuition, and you also need to develop the ability to read between the lines. Now, there's a couple of rules on this stream. Number 1, if it makes money, it's the right answer, okay? And number 2, asking questions is definitely cheaper than losing money. Those 2 things, those are good rules to live by. But the other thing to live by is, listen, I'm not a conspiracy theorist, but I don't believe in coincidences either. And when you take a good look at what's happening in this news cycle over the past 12 hours, This blows me away, absolutely blows me away. Now, I'm not going to get into the Trump appointees because a few of them have a lot of folks really scared. Kash Patel for the FBI, the head of the FBI, was a big news item. That one dropped over the weekend. But this right here developed yesterday. President Biden pardons his son, Hunter Biden. And this was a situation where the Bidens denied any wrongdoing for years and years and years and years. And Hunter got indicted by, a grand jury, and that's not good. Typically, that's not good. And also back in June, Biden swore that he would never pardon his kid, and that's exactly what he's done. Now, this is interesting because it looks to me like they're timid about that new administration coming in, doing some things on this front. Take a look at this one. This came out just yesterday, 5 hours ago. Clooney hits the news cycle, the powerful George Clooney, right? And no bigger Democrat in the world. He was stumping for Biden. He's friends with Obama. He got Kamala Harris the job. This is big stuff. So when we start seeing people get pardoned, now Clooney actually coming out against the Democrats, yes, it's a case of maybe everybody's eating their own, but it's also a case of potentially being big changes on the horizon in the U.S. political system. So I'm watching for things like bombings. I'm watching for things like the 25th Amendment being used on Biden to remove him from power. They've been saying that a lot over the last 6 weeks or so. If, in fact, that does happen, I guarantee you will see turbulence in your markets. Now, you'd say, Shane, what does that mean to my trading today? And I'd say, well, here's a good look at your E-mini Dow futures. You can see right here on this opening bell, big time. As soon as that participation returned to the office from the Thanksgiving break, bang, you saw a pretty good sell-off. That's about 0.5% in 30 minutes. So that's a 0.5% correction on the open. That's enough to blow us day traders right out of the water. 0.5% is a massive move if you're trading huge leverage. I got a great question from one of our traders down in Florida. So I want to say a good big shout out here. This was the question was, hey, Shane, I don't understand your Fibonacci retracement sequences and your spike to spike. I don't understand what a spike is. And I'm going to help you out right now. I'm going to show you what a spike is with a very obvious case today on that E-mini Dow. Two nice Piranha trades last night. Fantastic, Dragon. I'm glad you enjoyed the Piranha. We're going to talk about that in depth. The Piranha, if you're going to win with the Piranha, it's all about knowing when to trade the Piranha. If you're going to get bit by a Piranha, where do you typically go? Where do Piranha reside? They're in the water, yeah. But what kind of water? Big in the Amazon? Amazon's not exactly the swiftest river in the world. There's parts of it that move very fast, but the still water areas of the Amazon, that's where you get eaten. So you got to watch that. You got to watch crocodiles too. Maybe we should call it the crocodile. Actually, I got a strategy that is based on the crocodile. That's time for a different, or that's a different talk for a different time. Spike to spike. Let's go right here. It's essentially a swing high and a swing low. So just to help you out right here, the biggest thing I would say about it is a 3-candle formation. Okay. Look at the slow period right before the market opened today. There's candle number 1, there's candle number 2, candle number 3. Now listen, you've got to start somewhere, and typically you'll notice that that's a spike right there. Why? The high is higher than the first candle, and it's higher than the third candle. So I'm looking for obvious spikes. That's a spike high. Relatively simple to spot these once you get used to that idea. I'm going to spot them for you right here, and I'm going to tell you why. That's a spike high. Why? There's candle 1, candle 2, candle 3. Obviously, our high is way higher than candle 3. It's also way higher than candle 2. That's what an upward spike is, okay? Essentially a swing high. What's a swing low? It's the opposite, and that's a beautiful swing low right there. That's a beautiful spike low. Why? Candle 1, your low is beneath candle 1's low. Candle 3, candle 2's low is beneath candle 3's low. All it is a swing high and a swing low. Now, these evolve. You can spot them anywhere you want. The biggest thing that I always say is obvious. We're looking for obvious. So when we draw our Fibonacci's, according to the counterpunch right there, spike high, spike low, this is obvious to me, and I love it. Why do I love it? There's your opening 30 minutes, big time, half-point sell-off, and now you have an opportunity to say, is the market trending? Not really. Do we care if it's trending? I don't care. I got a good level to work with. Bang. Huge sell-off, a nice little look at the low. Right there, there's your spike high. Pretty good stuff. Spike high, spike low, 38% has been a fantastic sell as a resistance zone. There's your Fibonacci sequence. There's your 100% level. There's your 0% level. 38% is your topside resistance zone. Interesting, isn't it? That's a pretty good zone right there. Would I trade it again? No. Remember, support and resistance levels get saturated, and when they do give way and they do break, typically the market moves. So I don't think I would be selling 44.9 41s, but I have to tell you, that zone on an intraday trade, beautiful stuff. 44.9 41. You've got 44.9 50. You've got a nice big sell-off. This is still a bearish market. We're still intraday bearish as long as we're beneath 44.94. Spike high, spike low. So I hope that cleared that up. I want to spend a few minutes on that before we really get started with our strategies for today. I think that it's going to be it's going to be a pretty good day. So we started off with the Piranha. Let's go ahead and get over to the Piranha, take a good look at this strategy and see exactly what we can do here. So, the biggest thing to remember about a Piranha strategy is it's short term, and you've got to be able to really roll with the punches. You have to. It's high maintenance. It's low time frames. We're looking for flat markets. So if you're inside the How to Trade trading room, just go ahead and check out our strategies portion. Click on the Piranha. You're going to get this screen. Skipping ahead will mean you miss out on learning. Okay, continue on my current path is what you're going to click there. And it's going to go ahead and take you right to our Piranha strategy video. Be sure to check the video out, and remember, learning resources. We got Meet the Coaches, but we also have learning resources under there, a tab. Click that. You're going to have an opportunity potentially to get in on some of our good stuff right there. Learning sources. We've got PDFs for everything. Be sure to check out our PDFs. And then right there, the How to Trade Piranha strategy. That's sort of your intro. Very simple strategy, guys. Now here's what we're going to do. Remember, we're trying to capitalize on flat markets. That's what we want to do. Set your chart to the Great Britain Pound USD currency pair. Now we're going to start there, but we're going to apply it to other things, and I'm going to show you how to do that in just a second. You're going to select candles for your chart type. We're looking at candlestick charts. We want to add the Bollinger Band indicator to the chart. So we're going to add Bollinger Bands. We're going to use a period of 12 and 2 standard deviations. 12 is very fast. So if we're talking about a low periodicity Bollinger Band, and you're talking about potentially a 5-minute chart, that is a very, very fast, dynamic situation. You need to stay on top of that. That's a fast-moving system. You're going to place a lot of trades doing this. So the next thing you have to do is predetermine your trading window when you will trade the Piranha. Now, you want to avoid news events. So clearly you want to look at your economic calendar, make sure that, hey, something like NFP isn't coming out, something like that. Definitely do that. You want to make sure that you don't get caught in a situation where volatility is going to spike. Remember, Piranha hang out in that slow, stagnant water, at least some of the time, I think. I don't know. I'm not a biologist. We want really slow trading conditions, flat trading conditions. That's what we want to target, rotational markets. Can be pretty darn good. So when you start and trade, this thing's going to be key. Later U.S. session, like right now, the last 3 hours of the U.S. session, for Forex pairs, probably pretty good. How about the Tokyo session? Probably pretty good. So we just got to wait and see exactly what we can do. Are these always available on the website? Absolutely unclonable. Check them out. They're always there. They're right up in front of you. Strategies front and center. Just go ahead and give it a click. And the last thing, set the position size of your trades equal to 3%. If you want to trade for 3%, great. If you want to trade for 5%, I'm gonna allow it. I'm going to allow it. Just make sure that you have enough money to ride the downturns because that's what systems trading is all about. Now here's the deal. Your stop loss and profit targets are simple, 10 and 5. You're going to risk 10 pips. You're going to win 5 pips. Now, I immediately hear everything that you guys are saying, and I completely agree. Completely agree. That is a disproportionate risk to reward. Yes, it is. But with the Piranha, you are looking to hit a high probability of trades. A high percentage of trades you need to be winning. If you do it right, you need to be hitting about 75%, 80% of these things. Now, we're going to put this on a futures contract, and people are going to laugh because it's not what Mario Singh wanted, but I think I can build better trades than that. 10 to 5 makes it really hard, though. It makes it hard because when you take a loser, you've got to win twice and then some to overcome the spreads and overcome your loss. Very, very important that we understand that this is a strategy where you need to take a lot of trades and you have to hit your winning percentage. It needs to be up around 75 or 80%. And if it's not, that means that you're getting in on trending markets. The Bollinger Bands themselves should show you when the trend is in and when you should avoid trading the Piranha. We're going to talk about that in a minute too. We should go to the charts. Now, here's the key. If a trade stops you out, you must take the opposite side. So if I'm on a sell Piranha and I get stopped out, I have to wait for a buy. Now, if I win, my profit target's hit, I can either sell or buy either side of the Piranha or other side of my Bollinger Bands. That's the idea. All right, let's do it. This is sort of enough talk. Let's get right down to it. This is our Great Britain Pound USD Piranha trade. Looks like it's coming our way. Let's go ahead and just center up price. You can see we sort of, I'm not really interested in that spread. That spread's 8 fractional pips on the Great Britain Pound USD. I don't particularly care for that. That's almost a full pip. But remember, you're going to have to overcome those spreads, and that's you got to factor that in. So what do we have built here? Well, I mean, we have our trade built right there. We've got what, a sell limit order, which you're going to want right up there at the top, at the top of your what is this? At the top of your Bollinger Band. So right there, that's going to be your sell limit. We're looking for about $50, 5 pips. There's our profit, and we're risking 100, which is about 10 pips to the top side. Now, what makes this trade be attractive? There's a couple of things I'm looking at that I think are, pretty darn good. Number one, the market's flat. Right now, this is a 5-minute Great Britain Pound USD. The market is flat. It's moving sideways. Take a look at this. You've got a double top right up there. Both of those sells have cashed in. There would have been a Piranha sell probably right there. Let's see, what would the sell have been? Right around 126.37. Wouldn't have been great. What was your high right up there? 126.52. So you would have got stopped out there. If you were trading back then, you would have needed to buy. But take a look right here. You probably got that bid there to come home for you. Very, very delicate. Remember, trending markets are trouble. You get in on a trend like this, right during the heart of that London-New York overlap, you're susceptible to losing. So if you want to trade the Piranha and you're interested, slow trading conditions, like right now. It's slow. It's 11:15 my time. It's 1:15 p.m. Eastern. I'm not in love with this as being a time where we're going to see a break and a move out of the U.S. dollar. I don't see that happening. So what I like right here is to either sell this upper Bollinger Band or buy the lower Bollinger Band. And I think that if you do that, you're probably in a position to be pretty successful. Now, right here, you're going to see what the really difficult part of this strategy is. This is labor intensive. You need to constantly, and I mean constantly, be doing this. Now, if you're doing this manually and not using bracket orders, I'm just going to leave it there for now. If you're not using bracket orders, which is fine. Now, remember, a bracket order means you put down your limit order, and that's what you're going to be using here. You're going to be limit sells and limit buys with a stop loss and a profit target attached. If, in fact, you're not using a bracket order, then make sure that your limit orders are in the queue right on that Bollinger Band. So right here, let's take a good look at what we have. Have we hit it yet? No. But look at what's happening here. We're getting very, very tight. Very tight. Do I like that? Yeah, I do. I like that. With a Piranha, I think that's a fantastic idea. We're looking for tight Bollinger Bands. Parallel is best. No slope. You don't want to be in there. You don't want to be trying this on a slope like this. You could really get hurt. Right here, you sort of got swept out of the box before you got the replay. That sell right there would have been great, but you'd have been in big trouble losing. Why? Because the market's volatile. Right now, it is not volatile. We've got a sell in the queue right up there. If you want to put a buy, we could go ahead with a buy limit order right there. Take profit 5. Let's go right here. Take profit 5, stop loss 10. And you can do the same functionality on MT4 and MT5. It's not rocket science, guys. It's just basic bracket order stuff. Let's go ahead and move our stop loss down where it needs to be, which is around 10 pips, somewhere right around 101. Once again, we're trying to move fast here, but somewhere down in there. So that's your trade. You're selling your top, you're buying your bottom. That's it. That's what we're looking to do here. Interesting. We haven't quite got elected yet. I thought we would have had a trade by now. It looks like we're relatively close. Maybe right here we'll get our buy limit. You can see price sort of breaking down towards that area, and you're going to have a chance potentially maybe to get in there and grab a little bid to the top side. Let me see. Okay, right here from a Piranha veteran right here, Dragon 131. 2 nice Piranha trades last night. Fantastic. My most successful Piranha trades are when the distance between the Bollinger Bands is 10 pips or less. That's beautiful. That's what we just talked about. That is the crux of it. Piranha, or Dragon, you've got it. You've got it. I mean, the idea here is we want flat markets. Think about it. 10 pips or less is going to give you what? A nice flat market. You're not trending. I can tell you that. But there's enough room to go in there and get that money. And I bet you, you know what? I'm going to go out on a limb here. I would make a wager that if you looked at your past performances, if you were trading the Piranha over a long period of time, you would see that your winners probably only took maybe a 1 or a 2 pip draw. I'll bet you almost anything that they rotate up, they touch that upper Bollinger Band, they go right down for a sell, they grab the bottom one, and they go up for a buy. So if you get good at recognizing a flat market, the Piranha can be good. And you may not have to risk 10. Over time, you may say, Shane, my winners very rarely take more than a 5-tick draw. You may be able to dial that leverage down. You may be able to dial the stop loss down to 5 and say, okay, now I'm playing even money. I'm still hitting 65% of my trades. I got a winner here. All that stuff's food for thought. I can tell you the first thing that I thought when I saw the Piranha was I said, well, this is interesting. I hate the stop loss. Profit target's a little small, but what would it work great on? Futures contracts. So I'm taking a good look at this and I'm saying, okay, what do we got going here? All right, we got the ES. What's in rotation? What's moving flat? Is right now, do we expect any moves at all out of stocks right now? Not really. Slow, going into power hour here in about 2 hours. That might be a problem for us, but right here, I think we have a chance maybe to trade that E-mini S&P 500. So let's go right here. We're going to go back to this chart here. I'm going to go ahead and pull up I highly recommend building templates for these things so you can look at multiple strategies at the same time. You'll see right there we're sort of still working that trade. What I want to do here, though, is I want to pull up that E-mini S&P 500 futures and take a look at it. Interesting, huh? Bang, winner buy. Bang, winner buy. Bang, winner again. Can it work? Yes, it can work. It can 100% work. Right here's our sell. Still working that sell. I think we're either going to get the sell or the buy here. I'll put the buy back down just for the sake of argument, but it's going to be a challenge to manage these things and talk about other markets, that's for sure. I don't know. I don't want that. I want a take profit of 5 and a stop loss of 10. That's good enough for me. Let's go ahead and buy limit order that thing and put it in the queue. So that's sort of what we're looking to trade there. But this right here is pretty good stuff. So if I was buying right down there, I would have bought 6,000. Let's go right to our DOM here so you can see the price action of futures. But right down there, 6,059 and a half, or excuse me, and a quarter. What do we rotate up to? 61. Yeah, that's a winner. Winner, winner, chicken dinner. That's 5 ticks. So right now, if I'm trading this E-mini S&P 500 futures and I'm looking at the Piranha, what would I be looking at? I can either buy it down here. I can sell it up here. Let's put our orders down. It's really difficult to sort of do this. Maybe I can guess right and get one live, but right there would be our sell, take profit. No, take profit's going to be, let's see, limit order sell is going to be about 5. Good Lord. I swear, you get into this stuff technically and you do so much trading that it just turns into a real challenge to keep the tech working in your favor. But that would be your sell order right there. So you'd be looking to take this sell right there, sell limit. You can see right there we're queued up. We're very close to getting elected, and that's what we're going to try to do with the Piranha. Play a flat market right here. This is a flat market right now. Now, would I be trading the Piranha on something like the E-mini S&P 500 right after the U.S. Open? That's an emphatic no. Absolutely not. You don't want to do that. And the reason why is the market's active. Okay, right here, it looks like it's coming our way. We're only about 3 ticks off of the pace, 3 ticks off of the action. I want to get in here. I want this trade so we can illustrate exactly what a Piranha trade looks like. You'll notice that I'm trading 4 contracts on an E-mini S&P 500. That's not horrible leverage. I mean, you could probably get away with it. But see this? See how sensitive this is? Bang, you're going to have to move that up. You're going to have to always make sure you move that down. Your profit target and stop loss, especially if you're playing with bracket orders. Looks like we may get this sell right here. Do I like it? Would I bet this to be a winner? I think we got a pretty good chance of winning right here. Now, if the market breaks out and goes against us, that's life. That's about all we can do is just manage it and do the best we can with it. But, we've got our stop loss down. We've got our entry point. We've got our profit target. This is like a shake and bake bag. You put the chicken in the shake and bake and you shake it. This is shake and bake. This thing's ready to go. A can trade. Let's go ahead and just let this thing run and see if we can get elected. You'll notice how sensitive those Bollinger Bands are. See them moving right there? Okay, we're officially short. So we got our trade. We're officially short the market right here. What are we looking at? What do we want? We want good negative price action. Okay, we're up a few bucks. Let's see if we do get that rotation back down to that 60, 62 area. Now listen, if we get caught in a breakout and this thing runs up and takes us out and we lose, that's life. But what you've got to do is you've got to understand that our stop loss is finite. Don't move it. As soon as it's down, I don't care if you put it at 10, 5, 8, whatever. Don't move it. Because if price blows up and you decide that you're going to take a draw, that turns a little loss into a magnificent loss. And I can tell you that any of us, including myself, we're only about 1 or 2 magnificent losses away from getting absolutely blown out of the market. And I have to go find a different thing to do, have to find a different job. So I'm definitely watching this closely. Right now it's going in our favor. I like the trade. I think we're going to get paid off here relatively quick. Let's go down and print up. We need 6,062.25. We're in rotational market conditions. We're up slightly, but we look at this point of control down here. I mean, look at this action right here. We've just been rotating. I would be shocked if we don't roll down and fill us up right here and make a few bucks. Now, pressure's on us. We just got to wait and see exactly what happens. Sometimes these trades take a long time to develop. I mean, they really do. You'll be sitting here, especially on a Forex trade. You could be sitting here for a half hour or an hour or whatever, but right now, this one should get rectified here relatively soon. I would say in the next few minutes, we'll either know if we're a winner or a loser, and I'm watching. We got good price action. I mean, there's sellers there. We sort of have an elongated 5-minute candle. It would not shock me at all if we rotate right down and get paid off. On the other hand, you know, I always like to get in and out as fast as possible, not to be exposed to the market. This trade thus far is going okay. It hasn't gotten away from us just yet. That upper Bollinger Band really is setting up his beautiful topside resistance. I think we got a pretty good chance there at a winner. And I'm going to watch this for another second, and then we're going to go do something else because we can't sit here and watch this thing all day. And now there's sort of a break, and this is to be expected, especially when you're scalping. And now the question is, do we rotate back down and fill this 5-minute candle in, or is this sustained pressure and we're going to wind up on the wrong side of a breakout? That's trading. I don't care what the market does right now. Do I want to get paid off? Heck yeah, I want to get paid off. But if it broke up against us and we lost the money, that money was a calculated risk. And if we take the loss, we take the loss and we go to the next trade. Personally, I want the money right now. Cyber Monday. Baby needs a new pair of shoes. Come on, let's go. One more second and then we're going to go do something else. But right there, 62. I need 62 and a quarter. Somebody's dug in at 62.50. They're dug in right there. Look at the bids. You got 55 bids. You can watch the order dom right there. There's 11 bids there. There's 55 there. Now there's 57. Somebody's protected 62.50. If, in fact, we wash that out, we may be headed much lower, not just to right here. And you can see that's where the bidders are, 62.50. 5, okay, they're getting washed out. Now they're getting saturated. Now you've got 52. And we just went down. We touched our order, and we didn't get paid off. That's a challenge. You know, what do I do now? Do I get out? Do I stay in? Do I get out? Do I stay in? Now we want it. Well, let's go down and get it. Let's let it roll and see what happens. That's a great illustration, though. Right there, we went down. We hit our profit target, but we didn't get filled. On something like the E-mini S&P 500, that's going to happen to you, and it's going to happen a lot because the order queues are big. There's a lot of people in line, and typically they're all in front of us because we're retail. So you actually need that market to tick, maybe a tick beneath where you're actually shooting for. So right now we're back to square one. Now you see the market loading up maybe for another move north. I'm just going to let it play out. I think it was a pretty good trade. We got hit. What do? Do you move to break even there? Do you let it run? We're just going to let this run. I recommend you guys let yours run as soon as you have your stop loss and your profit target dialed in and you want to be a system trader. That's the Piranha. Essentially, that's the Piranha. Let's go ahead and take a look at our other trade. You'll see right there we should be getting short anytime with that trade right there on the Piranha. Really like that one. I'd be surprised if we broke out and took out a swing high. That would mean that the dollar would really have to do something. So that's how you trade the Piranha strategy, guys. Not much to it, really. Relatively simple price action strategy. Okay, let's go on. Let's move on to the next thing. Week 49, we're going to talk pendulum here in a second. Week 49, this is the game plan. Friday's the big one. U.S. non-farm payrolls. Be sure to check us out live. I'll have NFP live for you with all the coverage. We'll do some promo for it on Thursday as well. We'll have you locked and loaded and ready to trade that. I'll be trading Fibonacci's. That's sort of my weapon of choice, especially on short-term price action. Tuesday, Jolt's job openings and the FOMC members speak. I don't expect much Tuesday except for just more participation. So if I was going to say, hey, Shane, which day this week are we going to trend? Tomorrow could be a good trend day just because all those traders are getting back into the office after the Thanksgiving break. Wednesday, ADP non-farm employment change, the ISM, the EIA, and Powell. That's going to be a fascinating case study and what Jay Powell's going to say about interest rates. Remember, it's not an FOMC live or anything like that, but he is making comments, so we got to watch it. Thursday's jobless claims, those are weekly numbers. Those don't mean much. I wouldn't get too carried away with that. And then lastly, Friday's the home run hitter, so definitely be here for FOMC Live. Monday psychology, remember, this is how I approach Mondays. Most Mondays are slow. That's why we picked two strategies that are great, absolutely great for slow markets. Momentum, we want to get positive. We don't want to go into a hole. We want to get positive. We want to focus on our analytics, game plan for the week ahead. I believe we've sort of set the table for what's going to be a jobs data dependent week. Generate momentum. Let's get it going. And on Fridays, we preserve our momentum. Not this Friday. We're going to be trading NFP and seeing if we can make a little bit of money. Now, as far as our news of the day, I'm not covering this hardly at all because it doesn't matter. The manufacturing figures came in a little bit better than expected. So that suggests that manufacturing in the United States isn't quite in free fall. But those PMIs, Those types of numbers are academic numbers. Academics build those numbers. They work for think tanks. They're trying to invent a better mousetrap. They invent those numbers. They sell those numbers to the mainstream media. Writers and media types, they cover those to keep your attention and say, ooh, the ISM Manufacturing New Orders Index, well, that's a big deal. No, it's not. No, it's not. It hasn't done anything to the markets yet. So I don't see those as being market drivers at all, even though they are 3-star events. I wouldn't worry too much about that. T-bills, though, I always like to watch my T-bill market so I know what interest rates are doing, what interest rate expectations are doing. And today was just sort of a little bit of rotation down from last week, so we could say that the lenders aren't quite as excited about that bullish dollar over the medium term, 3 to 6 months. But once again, that's not going to move the markets for you either. Okay, once again, if you need to trade switch, Black Friday special is on. Get on over there and check it out. Strategies, this is another one. You're just going to go click on Pendulum, and we're just going to run through this one relatively quickly. It's going to be the same. Continue on my current path or move me to a new path. Click that, and that's going to take you. All right, here, what do we got? I just got a bell. You bet. Okay, we got filled up. Bang. I like starting the week with a nice winner. So we got that banger, that Piranha banger right there on the mini S&P 500. That was fantastic. I love those kinds of trades. I do believe you can adapt the Piranha to really any markets you want. Just pick the right time frame. We're going to work with 5-minute charts. Why would we work with 5s? Because we need a heck of a lot of trades to make this thing go. And by go, I mean make money. That's what we got to do here. So that was a good trade right there. I will bet anybody that over time you'll find out if you pick rotational markets correctly. To me, market states everything. It's either trending or it's rotating. If, in fact, you're interested in trading something like this, I would almost bet that the winning trades don't go very far above that upper Bollinger Band or below the lower Bollinger Band. I'd be willing to bet it. We'll see what happens. If you pick the right market state, you can hammer that strategy. That one can work. All right, here you go. Pendulum. This is the Pendulum strategy. This is a video that I made. It's on the website. It's about 6 minutes long. Go in there and check it out. I think it's an interesting video. Let's put it that way. I like the Pendulum because it gives us a chance to trade flat markets. Click on Learning Resources. Download the PDFs. Take a good look at our schematics. This is an easy one. 3 rules. Identify your support, identify your resistance, and calculate your trading range. Okay? It's easy. I'm going to show you how to do the support and resistance in a second. That spike low, spike high thing that I started the stream with, it's the same thing. I'll show it to you here in just a second. Here's the trade execution. We're going to buy when we see price test a support or a support zone and bounce 10%. We're going to sell when we see price test resistance and pull back 10%. Our profit target's going to be at the 50% line and the 90% line. I'm going to focus on the 50% line of our trading range. Now, if I lost you, don't worry about it. It's no big deal. We're going to build the trade live right now and show you exactly how to do it. This is one of my favorites. Now, when I'm trading pendulums, saying what time zone, you can put it on anything you want. Just do some back testing first. Love the 4-hour time zone for Forex pairs. Love it. I think the 4-hour chart for the Forex pair, a person could probably trade that and little else and be just fine. Now, I like my longer-term levels, my macro zones, and all that jazz. This is a pretty good one. So if I was looking at a pendulum trade right here, first thing I would do is I would go over to my Fibonacci tool. Now, in TradingView, it's very simple to edit these things, okay? You go right there. You're going to click here, and I've already got a template built. Now, a lot of folks are going to say, okay, Shane, I don't have the template built. It's easy. I'm going to show you how in a second. All you do is you go in there, you manipulate your Fibonacci's, and instead of 38, 50, 62, and 78, you just put it at 10 and 90%. That's it. It's simple stuff. So right here, let's reverse engineer it. Support. Why? Spike low, swing low right there. There's candle 1, candle 2 is the ultimate low, candle 3 is well above candle 2. There's your low. Swing low, spike high. Okay? Spike high right there, that's above this candle, the first candle, and as of right now, it's above the third candle. Okay. That's our pendulum. What's our trading range? 87.97 to 88.88. About 100 pips. Love it. Is this market trending? A lot of folks would say, yeah, the Swissy's trending right now. I'd say, not really. My upper Bollinger Band, and you don't have to use this with the pendulum, but the way that I look at it, not really. You got there right there on the Sunday open. The Swissy's up about 0.75% because the dollar's up today. Still, though, nice big 100 pip trading range. I don't have any problem at all with this. I don't believe that this thing's going to trend all week. There's really no market drivers until NFP. So I'm looking at this saying, okay, now what do I do to trade this? Let's get out the highlighter. That's going to be our market entry point. That's 10% beneath our resistance zone. But what has to happen before we take this sell? You're going to need to see price test that zone and then come back. Test. What do I mean test? That spike high is at 88.88. So I want to see probably a test of 88.87, 86 or 87. I'll give you 86. 86 or 87 and then pull back, or I'll give you all the way to 90. If you want to adapt a steadfast rule to that, you can. Typically, I eyeball it. If price breaks way past this, like 5 pips or so, I'm going to say, okay, the breakout's probably on. There's a chance that I could be selling when I should be buying. I'm not going to take that trade. Okay? Let's just go with 5 pips. If it goes past us 5 pips, we're not taking it. So if it goes to 93, we're not taking it. Comes back down to 79. After maybe we go to 90 and it pulls back down to 79, then we're short. Let's do that. As far as putting 5 pips at this side of resistance, no way. I'll go about 2 pips there. So 88, 88, 86 to 88. We'll start at 86. If price goes to 86 and then pulls back to 79, then we'll take the sell. All right, so let's go ahead and redo this because I start scribbling and get carried away. Spike low, spike high. Once again, this isn't exactly perfect, but that's our sell. Where's our profit target? 50% is down there at about 88.42. This is a healthy trade. This is 37 pips. Not bad. Not bad at all. What do you got down here? If price reverses from current levels, doesn't test resistance, and comes down, I would love that even better. Let's come down and test this order block. Let's hit 87.96 and then bounce up. Then we're buying 88.05s. That's my kind of party. I'd like that. I'd like that a lot. I would feel like we were going to win that one almost no matter what. This one, this is going to be a calculated risk. Where would I put my stop loss? 88.79 and 88.42. 37 pips. 1-to-1 ratio. That's one of the reasons I love the pendulum. It's a 1-to-1. 88.79, 88.42, 37 pips, 37 plus 88.79 is what? I was told there would be no math. 88.18, 88.18. Or excuse me, 89.18. We did go over that round number, 89.19. So there's your trade. 88.16, excuse me. Something like that. 1-to-1. Stop loss is up here. Profit target's right there. Now, Mario Singh says shoot for 50% and 90%. If you're going to do that, feel free. All you do is divide your position sizes up. Half of your position could be here at 50, and half of it could be at 90. I like 50. I'm shooting for 50. That's what I would do on this trade. So, good stuff. If we do get this enacted, we'll follow up with it tomorrow and see what happens. Stop loss is right here. Once again, I can't stress this enough. If the market breaks against you and you get stopped out, rip the Band-Aid off, take the loss, move on to the next one. That's it. That's it, and that's all. That's it. Take the loss. Take the loss. Take the loss. What it means, if your stop loss gets hit, it means that this thing is trending, it breaks out, and it trends against you, and you're going to find yourself in real big trouble, more than likely. All right. That's about it for the pendulum. I mean, that's the basic schematic of it. We'll take a look at that. I love 4-hour. If you wanted to trade equities futures, something like this, I could go to equities futures. 30-minute chart during the U.S. session is brilliant. One last thing, and then we're going to go ahead and sign off. I'm running way long today. A couple of levels you need to know on U.S. oil. This is good compression on a monthly chart. You can see right here what happened last month in November. We traded inside of October's month. Market's getting compressed. That means there's a lot of longs. There's a lot of retail longs in this market right now, believe it or not. Be very careful beneath last month's low. Last month's low, 66.59. And then the previous month's, October's low is down there at 66.36. More than likely, price is going to hit this price point if we watch this level out, and we're going to go down and take a look at our 64.50 zone, which is our bid. I'll cover crude oil in depth tomorrow. Right now, sort of a holding pattern. I wouldn't get too carried away. If you're trading futures, much the same look. Numbers are a little different. Last month's low, and then October's low. Take a look at what else you got down here. What's that low right there? 63.90. This is how breakouts happen. Just sort of off the top of my head, something that I've used to do a lot was trade breakouts. You will see a washout right beneath last month's low, especially in the futures contract, and you'll see one underneath October. What happens is typically there's going to be a big liquidity sweep beneath that level. You'll see a big move down. I think it goes right to 64.50, and that's where we get our bounce. So let's watch it relatively closely. I'm watching crude oil. Feels to me like it's a calm before the storm. I've been reading everybody in the markets have been saying, hey, we like the long side of crude. We like the long side of crude. And I go, not so fast, my friends. This is selling season for WTI, but that level of compression really shows you the offset of the election, geopolitical tensions, and seasonality. Wrap it all up, and what happens to price? Absolutely nothing. Say it again. All right, everybody, I'm going to go ahead and sign off. The E-mini S&P 500 trade was good. I'm not going to go back to the Great Britain pound USD. We got hit right on but we didn't get filled up, which that's just going to be part of life doing this. Trade the Piranha, diligent, a lot of work. Do the best you can. Always make sure your entries are as good as possible. That's it. All right, it's Cyber Monday, so head on over to Switch if you need a broker. If not, swing by the trading room at howtotrade.com. Send me a PM. I'll be more than happy to get back to you. Just be patient with me. It's an army of one. Actually, it's an army of two. We got a great video editor and a guy that's going to be doing some social media for us. So it's an army of two now. So just come by and ask a question, and when you do, just give me a little bit of leeway on the get back. That's a wrap, guys. All right, everybody, trade the action well, and we'll talk soon. See you.